Let's kick off with that gold price. Over $1,500 an ounce. We keep losing track as to how many all-time highs we keep seeing on a day-to-day basis. Dollar is weakening. Debt worries continue in Greece. S&P downgrading US debt. What is driving this gold price higher?
Well, I think you've touched on a few of the key themes. So, I mean, the main thing really is increasing concern about inflation and rising inflation in Asia in particular. So, both China and India have reported quite strong numbers for inflation in the last week or so. And as you say, dollar weakness helping to take things higher. And investment demand in particular in China we think is very strong at the moment. So, rising by about 30 to 40% in the first quarter of this year. And there's a lot of money being driven into precious metals as the government there cracks down on the real estate sector, and that's encouraging people to look for inflation hedges in other parts of the financial markets.
GFMS is not convinced that the buying into the gold market and silver as well is driven by inflation, but more so by negative real interest rates. Would you say that that prognosis at this point is the right way to look at things, given the fact that India, yes, has risen interest rates, but still currently in negative real interest rates?
Yeah, I think negative real rates are very important, particularly US rates. So in our long-term piece we put out a couple of weeks ago, we picked up on that as a key theme, helping to drive up gold prices over the next few years. And as we said before, we're looking for a 10% rally in gold this year and a 50% rally over the next 3 years. So we are very bullish on gold. So the inflation story is important. Rising GDP within India and China is very important. And those negative real rates in the US helping to kind of add fuel to the fire really for this rally in both gold and silver.
Let's touch on the silver price, just breaching that $45 an ounce level, Daniel. Do you think we could breach that $50 an ounce relatively soon?
Well, certainly from a technical perspective it's looking very likely, and there's a lot of kind of momentum behind the price at the moment which will be quite difficult to reverse. So silver's up by 45% so far this year, and we're not too far short now of that record high, so it seems quite likely we will go up to challenge that that level just below 50. Now, having said that, of course it's worth repeating that silver is dangerously overextended relative to gold, so on any kind of ratio basis silver is very expensive, and it's worthwhile just bearing that in mind. So we think silver will be, it's got a bit more upside in the short term, but we don't think it's a good buy at these kind of levels on any kind of medium term perspective.
Well, Daniel, you mentioned the gold-silver ratio. It's currently the lowest level that we've seen since 1983. I mean, it's below 34. You're talking about perhaps a correction coming through on the silver price. What kind of normalized levels would you like to see on silver where you say you're feeling relatively comfortable?
Well, I think probably between 35 and 40 is a more normal level going forward. So, you know, we are looking for higher gold prices, but we think silver could pull back fairly sharply in the next couple of months and settle back down to a more kind of normal ratio relative to gold.
Daniel, let's delve into this platinum price, because we saw platinum trading below $1,800 an ounce. It seems that silver is getting a lot more attention. It's got that industrial element, it's got the investment angle as well, and it's far cheaper than the likes of platinum. Do you think that platinum in a sense is losing its shine?
Well, both platinum and palladium have been hit by the kind of problems in the Japanese auto sector. So Toyota came out in the last week or so and said that they'll be running their plants in Japan at only 50% of their normal run rates until early June. So that's quite bad news for palladium in particular. But what we think will be interesting is the kind of rebound effect once those plants start up again. So global car sales were actually up in March despite the enormous problems in Japan, and once the problems in Japan start to be sorted out, then we think there's a lot of upside for platinum palladium demand in Q3. So we think that's the key thing to focus on at this point, that potentially there will be a big bounce back in PGM demand once those plants get up and running.
Well, Daniel, we've got oil prices also rallying quite significantly today. I mean, up almost 2% or so. As I mentioned, a much weaker dollar coming to the fore. What is going to make or break these commodities going forward? Do you think a lot hinges on what we could see on the US dollar, Or do you think that any more bad news out of Europe and the debt worries from the peripheral countries could add some pressure?
Yeah, I mean, that's a good question. I think our general view on the dollar is it will continue to weaken against the euro for the time being. So that obviously gives some more upside for a lot of these commodity prices. In terms of our view on oil, I think current prices are probably, we think, around about fair value. The fundamentals are not that tight for oil, of course, at this point, but a lot of these kind of speculative flows and weaker dollar helping to keep prices up at current levels.